Hey, welcome to the Closing Beat, everybody. Happy Friday. Hope you're having a great day today. It is raining cats and dogs here in the studio, but thankfully, the guy in the building next door here, our neighbors, gave me a lav mic, so we'll see if this audio maybe drowns out some of the rain in the background, but the show must go on, so we're here to go over the stock markets. We do this every day, 5 o'clock Eastern time. We go over the good, the bad, and the ugly in the stock market. We're financial advisors here at Jazz Wealth, and I hope you'll check us out at Jazz Wealth. So let's get started here. You know, if you've watched for at least the last couple days, we've been talking about May being the start of the historical 6-month stretch where it's very, very difficult. You wouldn't notice it today because the markets were positive after being down in the day, but May so far, it's the worst start. First of all, it's the worst week of the year so far, but it's also the worst start to May since 2009 when we had a flash crash in there. So, excuse me. You got to go back about 10 years to find a May that started off any worse than this May has started. We'll cover some of the stats and everything as we go, but I want to talk about the markets here for a second. You got the Dow higher by 115. That's off of lows of 300. So about a 430, 440 point rally off lows in the Dow. So an impressive reversal there. S&P added 10 on the day. The Nasdaq just squeaked out a gain with 6 points. If you look at the chart on the bottom right-hand corner of your screen, you can actually see how the market started lower after, last night's tariff news, which, by the way, I don't know, like, if you like watching the markets, did you get any sleep last night? Right at midnight, right when the deadline hit, go look at the futures markets. S&P, Nasdaq, it was all over the place, man. It was just crazy. I follow a lot of Twitter feeds and stuff. Everybody was going nuts right there at that time. Usually the overnight's pretty quiet. Very active market last night. That bled into today, by the way, and if you want to know, China, their markets had one of the best days of the year over in China. It was up like 3%. So they got a very positive result. We start the morning off here. All of our markets were lower. It was looking like another weak day, but all turned out pretty good. We'll cover the indices here in just a second, but I want to point out something. I have been saying it's the worst start to May since 2009. That's all great, and bad news or whatever, but what we do is we like to go forward in time. A lot of things that we teach our customers here are the details about what to expect going forward. And unfortunately, I have some bad news for all of you watching, as well as our customers. Next week is historically the worst week out of all the weeks in the market, right? So not only do we start May off on a bad note, but if you were to take the performance of every single week, study it, go back 10 years, 20 years if you want, in this case, 20 years, next week is the worst performing week year on average. So that's, you could think of it as, oh, well, great, we got this week out of the way. That was a bad week. How much worse could it get next week? But next week for the S&P 500, historically the worst week of the year. It's only been positive twice in the last 10 years, 4 times over the last 20 years. And the average loss over the next week is about 1.5%, 1.43% to be exact. Now, the good news is if you dig a little bit deeper, the best average performers are biotech, right? The IBB, which is a biotech ETF, the Nasdaq, the QQQ. Those have gains of around 1% next week. So not everything participates. The S&P has a rough week. The worst average performer next week, and I think I'm going to start doing things like this on Fridays, but the worst performer historically through next week is the VNQ. So if you're a Vanguard person, that just happens to have a bad week during that time period. But that's all I have for you there. Let's take a look at the stock market here today. Let me know what you think about the stats and geeky stuff if you like them. S&P, we started off the day by selling off, trying to break through the 50-day moving average for the second day in a row, unable to do it. And I'll go over the sectors here in a moment. Our class last night that we did for customers, you'll see the list is adjusted. We did a really unique class last night about analyzing the market. So if you're one of our customers, go over to the video library and check it out. Turned out a lot better than I thought. It was pretty cool. Anyways, S&P 500 back above the 50-day moving average. For now, the trend is intact. We had a temporary pullback. Everything basically remains intact. The Nasdaq, a little bit tech heavy there, wasn't able to squeak out as much of a gain. You got a lot of tech supplies and things that are coming from China that could have these higher tariffs, and a lot of chip stocks in there as well. Not too bad. It's still got a little bit of a gain on the day. I can't complain there. And the Dow actually had a good day here, adding the 0.5%. It's weaker overall, but look, the names that we talked about throughout the week that we've been talking about here, You've got the 3M, is what I was trying to say. 3M, the big sell-off, they came for it today. The bulls came for 3M today, and so really good there. And Dow DuPont, remember we've been talking about some of the weakness in the Dow DuPont, they came for that one today, had about a 1.5% gain. So little support from some of the weaker areas of the market. Now, if we go through individual sectors, I see some of your comments there. If we go through some of the individual sectors, what's going on here is they came after those oversold areas, right? So we've been kind of mentioning utilities, just a touch oversold here in the short term, at least as of yesterday. Look at today, strong reversal to almost recover the entire week. So money was being put to work now that the volatility of the trade stuff seems to be, just moving on for now. So investors went after the discounted and oversold sectors. Energy, if you look at energy, there you go, came back after that, midday, right? You started to see support. It was supposed to sell off. It looked red all throughout the day. People came back for that sector as well. Emerging markets, by the way. Good little reversal there after being oversold. I'm not saying these are buys at this, I'm not telling you to buy. I'm just saying here are sectors that are in a technically oversold position by most calculations that everybody uses according to the 50 and 20-day moving average. And investors, instead of selling, they came to buy those today. I think that's rather interesting if you follow that sort of thing. Basic materials, same thing. A little bit oversold in the short term, at least relative to the other sectors. Today, they came in to try to buy that. I kind of like that. Relative strength award goes to the financials through this whole pullback here. Not too bad. The financials have hung in there, and investors are willing to come and participate with that here as well. And if you follow our class last night in the dojo, we actually went through analyzing the markets, the financials, and the individual stocks, and how to kind of tell what's really moving on the plate, as you would say, as how the jello's moving on the plate. Anyways, there. All right, let's move on here. I've got there's a ton of things we could talk about. Can I actually see Uber? I don't know if Uber is going to show up just yet. Is our data going to pull it up? No, we may need a day on that one. That one's brand new today. Uber goes public today. Now look, this Uber IPO was really supposed to be a drag, right? Kind of on the market. Let's take the company and put it aside for a second. Your opinion on what you think about the company. $8.1 billion was to be offered to the public. They were trying to raise $8.1 billion. There was a lot of questions. I do an IPO article every week. There was a lot of questions whether people were actually going to show up and be able to support an $8 billion IPO. And they did it. I mean, love the company, hate the company, whatever you think of them. They did it. They raised the money. Everything went well. They did price at the lower end. It opened at, they priced at 45 last night. They opened at 42, and it closed below 42. So they get a little grief for maybe not the most successful IPO ever, but they blamed it on the markets. They had even the New York Stock Exchange president, or not president. Well, anyways, she was out there saying, look, there's some tensions overall in the markets, and that didn't help Uber. They tried to kind of pawn it off on the markets, but whatever. What you need to know is Lyft was a little bit lower on the day as well. I think Lyft got kind of the raw end of the deal today. But what you're doing now is on Uber, you're paying 6.3 times the most recent quarter sales. So if you look back the most recent quarter, you're paying a valuation of 6.3 times. So I thought, I don't know, is that high? We don't have much to go on. Let's take a look at Lyft. If you look at Lyft, 5 times sales. So a little bit of a cheaper stock there, not only from its IPO price, but also from a valuation standpoint. I get it. It's a smaller company and all that great stuff. Just fun to compare the two because those are going to be the new two that duke it out there. Lyft was down 7% on the day, by the way. Here's the chart of that if you want to take a look at it. Not looking good since its IPO. Like I said, I have it all on timestamp. You could see the Lyft video that we did prior to the IPO because I don't like watching people that go, I told you that thing was going to fall or whatever. No, I don't like that. I like if you can get a heads up to something. Now that makes more sense. So we did a video to kind of explain why Lyft is, it's going to struggle a little bit. Doesn't mean that at some point it's not a good deal, but now if you saw that video, now you understand from way back. Okay, let's take a look at Yelp. So Yelp shares lower by, basically 15% on the day. Earnings were, earnings, it wasn't like the big deal. The guidance going forward, that was the big deal. They guided lower for the second year or for the second quarter and the full year. Revenue growth was the focus. They're just not going to make as much as expected there. They deserve a little bit of a downtick on that one. Apple. So Apple pulled back. You know, this has been in the news all week. I'm not telling you anything new here. China tariffs, they rely heavily on production in China. That's a bigger deal. So they kind of got held back today, even with the market rally. Because, look, you got to figure those numbers out. All right, 25% tariffs on everything. How's Apple going to adjust? Are they going to adjust? I don't know about any waivers or anything. I highly doubt that's going to happen. But as this thing progresses, it could be a real conversation. And they didn't get much in the way of good news from like Goldman Sachs and JP Morgan and Raymond James, all telling their customers to move away from Apple and move more into software as a service type technology, if that's what you want to participate in. It's good news for things like Zoom, you know, like if you like, is Zoom still doing well? Yeah, it's good news for Zoom, like it's up 6% today. That's just money moving into technology that isn't physical, right? It's just software as a service. I can't think of the actual term right now. Friday, I was up all night watching the futures markets. Anyways, the moral of today's story is the S&P 500 still above the 50-day moving average. The uptrend still very much intact. Trade war was mostly excitement overnight. We actually haven't seen that much excitement in the overnight futures markets since President Trump got elected. That was an interesting night to watch as well. Huge, huge collapse and then rally. Pretty exciting. It was just definitely something people watch for sure. I'll take a look at some of the questions you may have. I have to ask you a favor. If you don't see me reply to one of your comments, it's because I'm not allowed to. I like to reply to comments, but I want to make sure I don't get in trouble either. So if you would, try not to leave comments that have to do with like, oh, you know, thank you so much, you're so great, things like that. I know most people want to see that. I actually get in trouble if I respond back to those. So sorry if I haven't responded to some of your comments. If I don't respond to your comments, it's because I'm not allowed to. I'm sitting there wanting to, but I'm not allowed to. So if you guys would avoid those kind of comments, it just keeps the regulators happy. It keeps me out of trouble, which means I can keep doing these videos. So if we ever talk on the phone and you happen to like me, you can tell me then how great everything is, but try to not leave a digital trail if you would. I appreciate it. Same thing with stock suggestions. I just can't respond to when someone says, do you think something's going higher or lower? I can't. Sorry. So sorry. We could talk about stocks all you like. S&P index spiders, that's just a short term, sorry. Did I say that at some point? Spiders are the SPY. You know why they call it that? So if you dial up the SPY, which is the oldest ETF out there, it is the original ETF, the original index ETF. We say spiders. Most people would just say the spiders or the SPY was up so much. And that's because of the company that owns it. The company that owns the ETF is the spiders, and it just happens to be close to SPY. So people say spider. Sorry. Sorry. Yeah, Boston Beer. I think I put it down below there. Boston Beer buying another brewery company there. Been crazy. Good stuff. You guys like Alibaba? It's really recovered, right? So Alibaba had a pretty tough go of it there towards the end of last year, just like most things did. But it started to sell off early. Can I pull it up real quick? Let me see. Here we go. There you go. I'm very familiar with this stock. I'm very, very familiar with this stock. And notice, look, the sell-off started very much before the overall markets. And then, of course, it participated in China's pullback and the U.S.'s pullback and everything. But not bad. That's a pretty good recovery here so far this year. Even this pullback, if you follow China, any of the Chinese indices that you like to follow over there, FXI and such, they all pulled back. Everything's taken a break. Alibaba's basically just giving you a little short-term pullback. Yeah. Dustin, you talk about money flow funds report you look at. Is there a free paid service that we can subscribe to get ICI? That's everybody follows the same thing. The ICI weekly fund flows. I don't know if there's like a retail public offering, but you should be able to find the basics of that data directly through them. Yep, that's nothing fancy, by the way. Like it's not like some secret sauce we have. I just like to read them. Cool. Love some pullbacks. I love it. Yeah, I get excited when the markets pull back. I just love studying it. I love looking through things and going over sort of all this good stuff. That's why I point out next week. It's kind of weird. The markets are pulling back, but next week has always got to be marked on your calendar as that's the roughest week of the year historically. I'll try to get into maybe more data and things if you like that stuff. The reason I focus on the data, by the way, is because those are facts, right? So rather than me sit here and tell you an opinion, Number one, I'd rather tell you facts so you have something that you can take with you. But also, it doesn't get me in trouble. If I just point out the facts, then I'm not saying anything that anybody else couldn't figure out themselves. Yeah. XOP, I certainly hope XOP, the Explorers, start doing a little bit better. It's been an underperformer. There's no real reason to believe that it would magically rally. But man, it has been an underperformer. I know it's something I'm very concerned that it did not participate with oil, and now that oil's starting or possibly starting to pull back, how does that happen? Is that all of a sudden going to be a little relative weakness there? So I would say that investors in general have concerns about XOP and the stocks, most of the stocks inside of them. Yep. You like the exposure to government or military contracts? Well, if you could probably pretty quickly build a very small portfolio that have all of that if you don't want to just go with an ETF. There's nothing wrong with the ITA, certainly one of the more popular ones in that category, but I would think look up the ITA holdings, look at what they own, and maybe you find it's either cheaper for you or more fun to just dig through. There's not going to be a whole ton of names in that sector. Now, if you'd said, Dustin, I want to, thinking about retail or something, right? There's just so many names, it's just way too much work. You're better off with an ETF in most cases. But something like this is getting a little bit more particular. You may have more fun just picking out stocks yourself in that category. Yep, not a suggestion, just a little homework for you, that's all. Lots of stocks have pulled back. Yeah, there's definitely a lot of stocks that have pulled back. 54% of the S&P 500 is now trading below its 50-day moving average, right? So if we were to go over to something like the S&P, you can see it's currently above the 50-day moving average. I don't know, pick a stock, Apple. Apple's still above the 50-day moving average, but only 55% of the S&P is in that category. We covered a little bit of that last night for our customers just to show, like, well, what sectors we're struggling, which ones are doing better there. Yeah. I'm a little, so Michael's saying, what do you think of country-specific ETFs? There are a handful of them that I follow. I'm sorry that the list isn't updated on the, oh boy, what happened? What do we do now? My programmers showed this to me before. Responsive? Nope. Oh boy, we're going to have to just go to a new chart here. We're going to have to go back to the dojo this way. I pressed something, sorry. Anyways, country-specific ETFs, usually off to the right, I have them in there. I like to look at like Brazil. And I mean, you can look at, China and things like that, Mexico. I don't really venture off too far off the popular ETF's beaten path, so I wouldn't be a good one for some of those that you've listed there. Sorry. Yep. What about VOO, very popular Vanguard index fund? Maybe you're saying, like, in comparison to the SPY, it's just preference, right? I mean, there's such a small price difference on these things if you participate. The SPY, a lot of more regular or seasoned investors will use this one just because of the liquid options. The VOO is fine as well, but this is obviously the most liquid. The VOO, I think, is just a touch behind it there. Yep. I think I did hit F12. I was just thinking about that. Yep. Yeah, no, there he is. I hit F12. Well, good to know. If I ever hit F12 in the future, it shows the mobile view. Perfect. Well, that's how you know it's a nice end to a long week. That is the end of everything I have to offer you here today. I wish you a great weekend, and we'll be back next week to do this all over again. I appreciate you watching. If I helped you in some way, maybe you'll hit the subscribe button. If not, that's cool too. Got to do what you got to do. Enjoy your weekend. We'll see you Monday.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.